Eternal trades at a P of 1000 plus. Retail investors see this number and they run. But FIIs and DIIs are continuously buying. So are these mutual fund companies destroying the wealth of their investors by investing in these companies at such a high PE? Before evaluating this, let's first answer. Is PE the right metric for evaluating whether a high growth platform business like Eternal is expensive or at a fair price? Actually, PE is not the right metric for evaluating companies like Eternal. But then what is the right way to value a company like Eternal? The answer is terminal value. And if you've never heard of this concept, you need to pay close attention for the next 3 minutes. Let's understand how Eternal makes money. Eternal runs 4 businesses, 2 large ones, Zomato for food delivery, Blinkit for quick commerce, 2 smaller ones, District for entertainment and dining, and Hyperpure, which is a purely B2B food supply chain business. Today we will focus on the big 2. It is something most people don't know. On every rupees 100 order, Zomato keeps rupees 31 as commission, Blinkit pockets rupees 26. That's massive. So if they are making 26 to 31 on every 100 rupees of ordering, why are they still losing money? Because they are aggressively investing every rupee back into scale. More dark stores or warehouses, more delivery partners, more marketing. So it is basically short-term pain for long-term dominance. Look at Blinkit's numbers. 1 year ago, 1.1 crore customers used to transact on the platform every month, and monthly order value was rupees 2000 crore. Today that has increased to 2.4 crore customers transacting every month and 4400 crore monthly order value. That's 120% growth year on year. How did they do it? They doubled dark stores from 1000 to over 2000, entered a lot of new towns, marketing spend nearly doubled. They are building infrastructure at a war speed. Now this is where terminal value comes in. The question is not what Eternal earns today. The question is what will it earn when the business matures. Blinkit is guided for a 5 to 6% steady state EBITDA margin, which is when the business matures, it will generate a minimum EBITDA of 5%. Assuming it keeps growing at this existing growth rate, which is 120% Y on Y, in 2 years, annual net order value would reach 2.5 lakh crore annually. Apply that 5% margin, you get 12,500 crore EBITDA. Zomato is already profitable and growing its EBITDA at 25% year on year. In 2 years, it will generate 3,800 crore EBITDA if it keeps growing at the same pace. Combine the two and you get 15,000 to 16,000 crore of EBITDA. Now compare HUL, one of India's most respected companies, generates roughly 15,000 crore EBITDA and trades at a market cap of rupees 5 lakh crore. Eternal today is at a 2.5 lakh crore market cap with a credible path to matching HUL's EBITDA in 2 years. You see the logic now. Of course, HUL's earnings are certain. Eternals are just a projection. But that uncertainty is exactly the risk you take on. But here's the most powerful signal. Look at what Zomato did once customers got addicted to the app. They introduced a platform fee of just rupees 2 per order. Nobody complained. Then they hiked it to rupees 5, then rupees 10. Today it is at rupees 15. Plus they've started charging long distance fee, surge fee, late night fee. So this is what happens when a platform achieves habit. Pricing power appears silently. And that is the terminal value thesis playing out in real time, right in front of us. Now will they be able to execute? Competition from Swiggy, Zepto is real and fierce. But if they do, the cash flows that follow will be extraordinary. But this is a big if. Now what you need to do is you have to track NOV growth every quarter, track unit economics, track warehouse expansion or dark store expansion. These three numbers will tell you whether the thesis is on the right track. I hope this example would have helped you in understanding how do you evaluate high growth platform businesses. We will have more such case studies in future on this channel. I am Deepak Pruthy and I am a NISM certified research analyst. See you in the next one and always keep the positive energy on.